Now let's move on to the next question. JJ has a factory which operates two production processes, cutting and pasting. Okay, so there are two processes. Cutting, this is the first process, and pasting is the second process. Normal loss in each process is 10%. Scrap units out of the cutting process sell for rupees 30 per unit. Okay, the first process 1, scrap materials are sold for 30 per unit, whereas scrap units out of the pasting process sell for rupees 50. Okay, so this is the process 2 scrap value. Output from the cutting process is transferred to the pasting process. Output from the pasting process is finished output ready for sale. Okay, relevant information about cost for the control period 7 are as follows. Now you are given the cutting process and the pasting process information. Okay, now what is required is prepare accounts for the cutting process, the pasting process, then abnormal loss, abnormal gain, and the scrap account. Okay, now first and foremost, we'll just analyze the cutting process. Okay, so this is the cutting process. So first of all, we'll identify how much is the input. Input to the process is 18,000 units. Okay, so 18,000 units, and of which 10% will be the normal loss. Okay, so therefore let's calculate the normal loss. Normal loss will be 18,000 times 10%. So that will be 1,800. Okay, so what is our expected output? Our expected output will be 18,000 minus 1,800 is the normal loss. So therefore, expected output is 16,200. Okay. Then you are given the actual output to pasting process, which is given as 16,000. Okay, 16,000. So basically we were expecting 16,200, and whereas our actual output is 16,000. So therefore there is an abnormal loss of 200. We were expecting 16,200, whereas our actual output was 16,000. Therefore, abnormal gain is 200. Now, with regard to this input, we have a material cost of how much? 540,000, plus we have, this is 540, and labor and overhead cost will be 324,000. Okay, the total is 864,000. Okay, so this cost has to be divided by the expected output of 16,200. However, since you are given the scrap value for the losses, which is which could be sold at 30 per unit in the process 1, which is the cutting process. So therefore, from the material cost, we need to eliminate the scrap value of the normal loss, because usually we don't allocate any cost for normal loss. So since there is a scrap value, that scrap value has to be removed from the material cost. So our normal loss is 1,800 units. So this could be sold for 30 per unit. Okay. So once you take that, the total will be the scrap value of the normal loss that could be realized will be 54,000. So 864 minus 54,000, how much? 810,000. Okay. So this cost has to be divided by our expected output of 16,200. Okay. So once you calculate this, so that will be 50. Okay. So our cost per unit will be 50 per unit. Okay. Rupees 50 per unit. So this is the cost per unit calculation. So this is cost per unit calculation in rupees. Okay. Now this actual output, an abnormal loss, has to be valued at the rate of 50. Okay. Now let's complete the cutting process. So we'll prepare the cutting process account. So first of all, we'll take the input, the material. The material was 18,000 quantity. It was 18,000, 540,000. Material 18,000 quantity, 540,000. Then labor and overhead, 324,000. Okay. Then we'll take the output to pasting process. Transfer to pasting process is the actual output of 16,000. Okay. So transfer to pasting process, we can say transferred to pasting 16,000. So 16,000 times 50 will be how much? 800,000. So the cost of output will be 800,000. Then we have the normal loss. This will be transferred to the normal loss. This will be transferred to the scrap account. Scrap account. So normally we don't allocate any cost to normal loss. So normal loss is 1,800. Okay. So this could be sold at 30. So therefore 54,000. So this has to be transferred to the scrap account. So 1,800, 54,000. Okay. Then we have abnormal loss. Abnormal loss of 200 units. Okay. So this 200 units will be valued at 50. So that will be 10,000. Okay. So this account, if you balance, as you can see, the total is 18,000 units. And here also 18,000. Then the total will be 864,000. 864,000. And here also 864,000. So let's transfer this normal loss to the scrap account. Okay. Now I have already opened a scrap account here. Okay, so abnormal loss and scrap account. So the normal loss of 1,800 is transferred to the scrap account. So because this could be sold for 54,000, then abnormal loss from the cutting process, was 200 units at 50, so therefore it is 10,000. Okay, so this is a total abnormal loss. Okay, but when you take the total loss from the cutting process, okay, so our normal loss is 1,800 and abnormal loss is 200. The total loss of 2,000, 1,800 and 200 could be sold for 50. So therefore, 1,800 we already accounted in the process account, 54,000. Also, this abnormal loss of, sorry, this is 30. This is also 30. This could be sold for 30. So therefore, this will be 6,000. So total proceeds will be 60,000. Okay. So therefore, we need to transfer from abnormal loss account to the scrap account. 200. We can sell this at 30. Okay. So which can be sold for 6,000. And abnormal loss, $200, which is 6,000. Okay, so the entire loss could be sold, and you can realize the money, 60,000. Okay, so the total amount will be 60,000. And the difference in the abnormal loss account, now 10,000 and 10,000, the difference has to be transferred to the profit and loss account. This is the remaining loss. Okay, so these are the relevant accounts for the cutting process. Okay, now let's analyze the pasting process. Okay, So please remember the cutting process output, which is 16,000, will be the input to the pasting process. In addition to that, they have added material, which is 14,000. Okay, so 14,000, the cost is 700, and the labor and overhead cost is 1,350,000, and the actual output was 28,000. Okay, so therefore, let's analyze this. Let's analyze pasting process. Pasting process. Okay, so we have input from cutting process, which is 16,000. What was the cost? Which is 800,000. Then added material 14,000. Okay, so 14,000, 700,000 is the cost. We'll take the cost as well. Then the labor and overheads, 1,350,000. 1,350,000. So if you take the total cost will be 800 plus 700 plus 1,350. So that will be 2,850,000. So that is the total cost. Now let's calculate the normal loss. So normal loss will be the total of this. How much? 30,000, right? So 30,000 times 10% will be the normal loss, which is 3,000. So how much is the expected output? Expected output will be 30,000 minus 3,000, which is 27,000. And the actual output is given as 28,000. Okay, so this is 28,000 is the actual output. Okay, so if you compare the expected output of 27, we were expecting 27,000, whereas our actual output is 28,000. So therefore, there is an abnormal gain of 1,000. Okay, so 28,000 minus 27,000. Okay, so abnormal gain of 1,000. But if you analyze the total loss will be, our total input to the process was 30 and actual output is 28. So therefore the total loss is 2,000. So this could be sold at 50 per unit. Okay, so this is the second process, which is a pasting process. The scrap value of the losses can be sold for 50. Okay, so therefore the total cash that could be expected from pasting process will be 2,000 times 50, which will be 100,000. Please remember this. Okay, shortly I will explain you how this can be accounted for. Now we need to calculate the cost per unit. Okay, how do you calculate the cost per unit? The total cost. Okay, from total cost, we need to eliminate, okay, the normal loss of 3,000. Okay, 3,000 that could be sold for 50. Okay, so once you eliminate this, this should be divided by the expected output of 27,000. So therefore, our cost per unit will be 100 per unit. So this is in rupees. Okay, so our actual output should be valued at 100 per unit, and also abnormal gain should be valued at 100 per unit. Okay, so now let's move on to the process account pasting. So we can say from cutting process, we have 16,000, cost will be 800,000. Then added material 14,000, 700,000. Then we have labor and overheads 1,350,000. 1,350,000. Then we have normal loss of 3,000 that could be sold for 50. Okay, so that 50 is 150,000. Okay, so 3,000 times 50 is 100, and this will be transferred to the scrap account. Okay, then finished goods, which is 28,000. This will be valued at 100 per unit. Okay, so that will be 28,000 times 100 will be 2,800,000. Then we have abnormal gain. Abnormal gain of 1,000 valued at 100. So this will be 100,000. Will be transferred to the abnormal gain account. So once you take the total here, what is the total? The total will be here 31,000. 31,000. The total cost will be 2,950,000. 31,000. 2,950,000. Okay. Now let's prepare the scrap. Will transfer these amounts to the scrap account. This has to be transferred to the scrap account, and this has to be to the abnormal gain account. Okay. So scrap account should be 3,150. We have from the pasting process. Pasting process. $3,150,000. Okay. Then we have abnormal gain account from the pasting process. which is 1000 times 100, which is 100,000. Okay. Now, since this abnormal gain of 1000, if there is an abnormal loss, that loss could be sold for 50. Now, in this scenario, we will lose this 50. So therefore, the scrap account has to be credited with, okay, 1000 times the scrap value 50, which is 50,000. So we are not going to realize this amount. So therefore, our actual gain to the profit and loss account will be 50,000. Okay, this is a total 100,000, and this is a total 100,000. And this amount has to be transferred to the scrap account. So scrap account, if you take the scrap account from abnormal gain account, we transferred 50,000. So therefore, we can realize out of 150,000, therefore we can realize out of 150,000, only 100,000. Okay, because as I explained you earlier, even though the normal loss is 3,000, we had an abnormal gain of 1,000. Okay, so therefore our actual, the total loss was normal loss minus 1,000 abnormal gain, which is 2,000. So this is the actual amount that we could realize, which is 100,000. In other words, our total input was 30,000. Our actual output was 28,000. So therefore, our actual loss, the total loss was 2,000 times 50 is 100,000. Okay, this is the 100,000 that we can realize from the process. Okay, so this is the final answer. We have the cutting process account and the pasting process account. And also we prepared the abnormal loss account, scrap account, and the abnormal gain account. Okay, so if you have any doubts, what you can do is you can comment below, send me a message. Okay, so accordingly I can discuss if there is any difficult or problematic areas. Okay, so thanks for watching, and I'll see you soon again.